If you owe the IRS back taxes, listen up, because I'm going to share with you a program the IRS has had in place for years that most people have never even heard of. It's not magic, but you can save on your back taxes and pay the IRS a whole lot less. Now, the way it happens isn't by jumping through a loophole or tricking the IRS with their own forms, but it's actually doing the math the right way and using the IRS formula to qualify for one of the three primary targets that, honestly, nobody really has even heard of because, let's face it, the IRS doesn't do a really good job of publicizing these programs. Now, everyone's heard of the Settle for Less with the IRS program because that came out under the Fresh Start program in 2011. That seems to be a few years ago and it doesn't sound very fresh anymore. So marketing that way is kind of different, but under the IRS Fresh Start program, they came up with this idea that you could qualify for a payment plan and actually pay the IRS over that payment plan a lot less than they say you actually owe them. The way you do it is, well, before I get into that, the way you qualify for an IRS payment plan is the same way you qualify for hardship status, where the IRS basically presses pause on the amount that you owe and they don't pursue you with active collections. The payment plan that I'm talking about is a partial pay installment agreement where you can qualify to pay the IRS not what they say you owe, and in fact it'll be based on what you can afford to pay on a monthly basis. You know, most people think, they're like, oh great, I gotta pay the IRS $1,000 a month. Not unless your financial numbers come in and make it look like you can afford to pay them $1,000 a month. In that case, well, there you are. But what the IRS does is they take a formula and they look at how much you can afford to pay. So let's talk about these programs. And let's kick it off with the installment agreement. Oh great, I get to pay the IRS in an installment agreement. I'm going to pay them $1,000 a month. Not exactly. You're going to have to pay them what the numbers say you can afford them. And it's all basically doing the math the IRS way. So if your income and your expenses allow you to have some discretionary income at the end of the month, well then you're going to have a little bit of a payment. But that's better than paying $1,000 a month, right? Let's look at a partial pay installment agreement. Oh great, an installment agreement. I get to pay the IRS $1,000 a month. Not exactly, unless you can afford to pay the IRS $1,000 a month. So the IRS has these charts, these formulas that they work with. It has to do with your allowable living expenses. There are national standards. I put them together and I use these with my clients every day. So they have to do with how much it costs to live in your house, how much it costs to take care of your utilities, how much it costs for you to pay for your car, how much it costs for you to operate your car. Now, just going over these numbers, you can already see if you lived in California versus Ohio, your costs for taking care of a car and putting gas in it are going to be different. So the IRS allows for that for certain expenses, like vehicle expenses and housing expenses, but they have a cap, and that's your national standard or your local standard, and you really can't go over that. But if you can't really afford to pay $1,000 a month, you're not going to have to, but they will qualify you for whatever you can afford to pay. And if after 10 years or however long is left in the collection statute, the period of time that the IRS has to collect, well then, if you don't pay it all up, it's gone. You've done what you can. And the IRS is okay with that. Let's talk about the currently not collectible process. Now this is a hardship status where if you really can't afford to pay your monthly expenses, the IRS can see that. You submit your financials, they're like, yep, you can't afford to pay us right now. And they press pause. So this currently not collectible status works for you if you can't afford to make your monthly living expenses. So I put this guide together. So if you're in New York, Baltimore, or Philadelphia, I know for a fact that your vehicle operating costs are going to be different. You get the idea. They divide the country into regions, they look at what your costs are, and yes, They are abysmally low, but they're a standard that we can use to determine if you qualify for that currently not collectible status. It also helps us determine what your allowable living expenses are for that installment agreement. And if you qualify for a partial pay installment agreement, that's great. It's the next best thing to the offer and compromise program. And let's talk about that one. That's the elephant in the room. The one that says you can settle for less with the IRS, right? Well, in 2023, 41% of the people that applied, about 30,858, and in 2024, half of that got approved, 21%. And they had a 10% uptick. Now, this is all math to say that not everybody qualifies for the offer and compromise, and a partial pay installment agreement does the same thing, where you pay the IRS less than what they say that you owe them, but you do it over a period of time rather than all payments in 6 months or 24 months. There are a lot of little nuances to that offer and compromise that nobody really talks about that has to do with what you can afford to pay in 6 months or what you can pay over 24 months. Listen, if you have a smaller payment agreement and you only have 6 years left to pay, that seems to make a lot more sense to me. Cash flow wise, there's a little crimp in your step for 6 years rather than a big punch in the jaw for 6 months and you never really could recover, but you took care of that IRS debt. So that's where sometimes a partial pay installment agreement will work better for you than an offer and compromise. But it all depends on your numbers. And speaking of your numbers, if you don't know how to run the numbers, how do you know if you're going to qualify? So let's go over that. If you've got a little bit of money left at the end of the month and you might qualify for a small installment agreement, I say give it a shot, give it a try, but find somebody who knows how to run the numbers. If you qualify for a partial pay installment agreement, you're in. But if you really can't afford to make ends meet at the end of the month anyways, it might be best just to get yourself qualified as currently not collectible. I have had clients who were currently not collectible, and when they applied for currently not collectible, oops, they forgot to report her pension, her 401k plan. Well, that's something that the IRS takes into consideration. So if you owe the IRS more than you can reasonably afford to pay them, there are programs out there that you might qualify for. It basically comes down to your reasonable collection potential, your allowable living expenses, and your discretionary income at the end. These are all technical terms that fit into this formula that the IRS has for each and every one of those 3 programs that I just mentioned. If you qualify for one of them, it feels like a godsend because there's a huge weight lifted off your shoulders. Knowing that you don't have to keep looking over your shoulder if the IRS is chasing you, but that you can actually qualify for a program that makes your tax debt with the IRS much more manageable. Knowing somebody who knows how to do the numbers can be magic because each one of these formulas has to do with qualifying for one of these IRS programs. If this has been helpful, I would really appreciate it if you subscribe to my channel. Click that like button, click subscribe, and hey, while you're at it, click in the description below to see if you qualify for an offer and compromise, hardship status, or a simple installment agreement with the IRS. I hope this has been helpful. My name is Josh with Best Tax Pro, and I hope you have a great day.